Inflation today caught the markets by surprise. We were expecting things to come in at 3.2% year over year, and what we got instead was a hot 3.4%. And it really stirs the pot, if you will, on what the market was thinking would happen in the coming weeks and months. All about that centric story of interest rate cuts. People were thinking it's going to be March. Now there's not so much security in that idea of when those rate cuts come. As we know, rate cuts completely dominate market sentiment right now because the sooner those rate cuts come, the more optimistic the market's going to be as long as the economy is hanging in there alongside it. But also on other hand, we saw that compared to November, consumer prices went up 0.3%, more than 0.2% projections, with housing costs driving more than half of the gain. On the other hand, core CPI was up 0.3% for the month and 3.9% from a year ago compared to estimates of 0.3 and 3.8% comparatively. So what we see here is basically a hot inflation read, and that shakes things up. So let's have a look at the charts. So to start out on the right-hand side of the screen, you can see there is a clear and decisive reaction here, but it wasn't so reactive immediately. So let me get to that in just a second. The S&P 500, the Nas, and the Dow are all down on the day, and over 0.5% at the time of recording this. We see oil up, we see silver down, gold is slightly up, but almost flat. And the dollar index actually looks pretty strong. Take a look at it here on the daily chart. You can see price is actually backing its way back up into this resistance and calls into question again whether or not this level can actually break for the bulls. I've been very clear at this level. I'm bearish, but if this level breaks, we have to hand it to the bulls short term that this is what the bulls wanted to see. They wanted to see a hotter than expected inflation read, right? In order for the the dollar bulls, we'll call them dolls here. In order for the dolls to have a good, movement higher, a sustainable leg higher, we need something that challenges the establishment of interest rate cuts are coming, inflation is cooling, and today was a pretty good start considering inflation didn't cool further. We saw a hotter than expected read, and that, to the bulls' credit, is a little bit of a check mark in their bullish side. So I think that what gets interesting from here is to watch price action. We can now drop it down, for example, to the 4-hour chart and take a closer look at where price action sort of has ended up at the time of recording this. You can see we are testing the upper limits of this resistance zone that we can see looking left. And the way I see it is that if price is able to break and close above these levels here today, specifically I'm saying a close above like 102.75, is a good shot, I would say, that bulls carry the torch here for a little bit, and that perhaps we're finally going to see some of those pullbacks that we've been thinking about on the S&P and the NASDAQ. But again, I'll get to those in just a moment. But right now, it does seem like dollar bulls are the winners on the day, completely holding support here at 102.15, surprising me and many others with this hotter than expected read. Okay, so next up on our to-do list is to take a look at this gold market reaction, and it's not pretty for the bulls. I can tell you that. This dollar move definitely does not help the bull case for gold. And I've been in the bull camp for a little bit, and that is of course largely due to seasonality. I'll show that chart real quick. So seasonally, you take a look at gold and expected 2.3% roughly gains this month, and that's based on a historical 10-year average. And next month, we're also expecting bullishness for gold. So what's going on here? What's the deal, Nick? And why are we seeing, relative weakness? Take a look at this. We're going to switch over to gold. Well, we're already there. 1.63% actually down on the month. So this is our current year performance. You can see we're down 1.63% when we were expecting 2.34%. Nick, seasonality doesn't work. You need to get rid of it. It actually, to be fair, seasonality is not a perfect indicator, and nothing really is. But I do think that this is a surprising underperformance from what we were expecting. And I gotta say, so far, I've been dead wrong about gold going into January. The fortunate side is I haven't really been taking any trades despite being wrong because I haven't had the price action triggers. This is why when we talk on this channel about fundamentals and sentiment and technical analysis, we wait for them to align, not just when one says buy, you get long, or one says short, you get short, right? We combine multiple factors to create a more complete view of the market. markets. So seasonally, I was expecting bullishness for gold, but I haven't seen the price action, and today does not help that story one bit. Take a look at this. You have, again, resistance holding on this tick higher during all that volatility that we saw during the CPI release. Price shot actually down and then up and then down, and now actually closing very weak on that 4-hour candle previously, and now could actually be headed back down to test that 2020 level. If you're a gold bear, let me just say this. If the dollar does have a little bit of a run and you're a gold bear, keep an eye on that breakout, because right now price action, TA, if you will, still looks very bearish in my personal opinion off of the 4-hour chart. Now this is a daily level of support, and I'll show that to you. This is a daily chart level of support that's been holding pretty stubbornly, but perhaps this CPI number could actually get us the breakout to the downside that sellers have been looking for. Now, let me be clear, I am not a bear on gold, but this price action still looks bearish. For me as a bull to actually take trades, I'll point out this again and again, I am waiting for 2040 to break. I need some sign of strength. And if that does happen, I'm interested in looking for opportunities of a reversal in this move. But right now, we're trending lower. I got to stay out of the way. All right, and now a look at the indices. I told you I would get to them, and I am actually just out of my position here. We ended up closing on this trade for about a $9,000 or $10,000 profit. I'll have to find that number and share it with you here on the screen so that you can see it. Boom, there it is. It's now on your screen for you. That's how much I made on this trade. It was a great trade, and I'm very happy with the way it performed. Although, admittedly, I would have liked to see this area of support hold, but because it didn't, that was my cue to get out of the trade. And this CPI number is a good catalyst for me to say, hey, it's not working out. Let's get out of the way and wait for some further bullish news before we confirm that this is, in fact, going higher. So CPI today kind of kicked me out of my trade, and I'm okay with that. Again, hotter than expected inflation that kind of throws some cold water on the idea that interest rate cuts are coming in March. And so for me, I'm happy to get out and look for another opportunity on the indices. I am bullish, you guys know this, but with today's inflation number, I'm going to stay on the sidelines and just kind of recalibrate a little bit on the S&P. But entered over here, stopped out over here after the break of this support level. This again was shared inside of our VIP group. If you're not already in there, you get notifications anytime we take trades. First link down below in the description if you'd like to sign up for our signals. You can get more information by chatting with a representative on our team, and you get extra discounts if you do so. Real quick, guys, here is a full list of my current active positions. You can see I no longer have that S&P trade and closed out of it for profit, but we do still have a few trades remaining. My Russell puts are not looking so hot right now, but my technology puts that I sold are. Let me be clear also, these are puts that I've sold, so I've shorted puts. Essentially, I am bullish on the Russell, I'm bullish on XLE, which is an energy ETF, I'm bullish on the technology ETF, which is XLK, and I have a small position in Chinese large cap stocks. Kind of a lighter bench here today in terms of positions, but with that S&P trade getting knocked off, it's probably time for me to kind of look around the room, see what else is out there for me to trade, and we'll go from there. And I mentioned this earlier, but if you're interested in getting the notifications for trades that I'm taking when I take them with full breakdowns and analysis behind every trade, I trade indices, commodities, FX, and even stocks and options. If you'd like to get all of those notifications, click the very first link in the description and we'll get you an extra discount for being a YouTube subscriber. Thank you very much for your support. And again, come join us in the VIP if you're looking to trade alongside myself, Frank, and Ivan. Here's a quick look at retail positioning in terms of the major currency pairs right now. What we see is that we have a couple contrarian signals, so dollar Swiss and Australian dollar. These are getting bearish contrarian signals due to the fact that retail traders are piled in more on the long side, especially that dollar Swiss seems very favored by retail traders on the long side. So we're getting a bit of a bearish read there. On the flip side, dollar yen is getting actually a strong sell rating, I guess, by retail traders who are heavily positioned on the short side compared to the minority on the long side. That's actually giving us a bullish contrarian signal going against the crowd on retail sentiment. I've just gone ahead and added in commodities here so that we can take a quick look at gold and oil. And what you can see here is that looking at gold, we have about a split 55-45. So no real polarization in the room when it comes to retail traders. But when you take a look at oil traders are very positioned on the long side, so actually giving us a sell contrarian signal currently. We're now taking a look at the put to call ratio, and if you don't know what puts and calls are, they're basically options, and they are the idea they're basically bullish or bearish bets that traders can take in the stock market. For example, if you think the market's going to go lower, you may consider buying a put. If you think the stock market is going to go higher, you may consider buying a call. This tracks the actual ratio between the puts and calls that are being traded out there on the options market. It's an incredibly useful indicator. Even if you don't trade indices or if you don't trade stocks, it can still be very useful to understand sentiment, what the sentiment currently is. So we consider this to be neutral when it is closer to the gray line at 50%, and we consider this to be more bullish sentiment from the crowd when it's low and more bearish sentiment when it's high. What you'll notice is that we just went off the charts here in the latest reading at 155%. What this indicates to us is that, again, basically options traders are incredibly bearish right now, which is actually, from a contrarian standpoint, could be a bullish signal. So when it enters into these extreme readings for us, I generally will look at that as an opportunity to actually look for opportunities to get long or find bullish opportunities amidst all of the panic that seems to be going on. So when everybody's buying puts, I'm looking to kind of be on the more bullish side of things, not just the indices, but more risk on assets. So perhaps I'm looking to sell the dollar in those environments, etc. But again, we'll still wait for price action signals to get long or short. And here's another sentiment indicator that might be useful. It's the AAII Investor Sentiment Survey. What we can see here is that in terms of bullish to bearish sentiment, the crowd still is overall more on the bullish side on a longer term standpoint. This is more of a 6-month out reading, which can be useful for understanding kind of where investor sentiment lies. It's been increasingly bullish recently, but at one point you can see early back here, October, November, that turn incredibly bearish. So worth keeping an eye on these sentiment indicators to look for extremes and possible opportunities. All right, now we'll take a quick look at the COT data. Now this is of course the other end of the spectrum. These are your more professional traders. These are your hedge fund managers, asset managers, large speculators in the market. Where are they positioned? This can be very interesting to keep an eye on. Last filing, they went very bullish on the indices. So I think taking a look at all of these different metrics, it's sort of painting a more bullish picture for the indices. We can see that on a net change basis on the right-hand side of your screen here. We're seeing some interest overall, some big bullish moves basically in more risk on assets. So the Dow, the NASDAQ, the Canadian dollar, the Kiwi, and the Australian dollar, those would be considered more risk on assets. Meanwhile, you take a look at the other end, we see oil being sold, we saw the dollar being sold, and the yen being sold. These are your more traditionally safe haven things getting sold or even shorted. So seems like overall institutional money is still leaning in on the risk on side, betting that perhaps this year is a good year. And in that environment, I'm generally going to be looking for more dollar sells, indices, bull setups. And we can actually see that the Edgefinder's top setups algorithm is reflecting this as well. We can see that NASDAQ is still bullish, Dow is still bullish. So I will be looking for pullback opportunities on some of these setups. Same thing with some of the euro pairs. Bitcoin is even something we'll get to in just a moment, but and even some crosses against the yen. So certainly an interesting read across the board from the Edgefinder, which tracks a lot of sentiment as well as economic statistics. And by the way, we are now offering Edgefinder trials. If this is something that you're interested in, if you'd like to check out the tool for yourself, there will be a link down below in the description, or you can head over to our website, a1trading.com, and I'll show that to you now. On our website, a1trading.com, over here, there's an Edgefinder trial button. If you fill out the application, someone from our team will reach out to you with some more information. Another option you have if you're looking to get access to the Edgefinder is to chat directly with our team. If you send us a direct message using the very first link in the description, you can ask us about discounts that are currently running, pricing options on the Edgefinder, or if you have specific questions before you purchase, feel free to chat with a representative on my staff who will get you some more information about the tool prior to your purchase. And I highly recommend that you do that. If you're thinking about getting the tool, we always always want you to speak with us so that we can make sure that it's a right fit for you. We're not trying to just sell the software to anybody. We want it to actually be something useful in your trading journey. So let us help you with that. Send us a direct message, first link in the description. Now, I know there's not that much to look at on this screen, but it tells a very important story for the crypto traders out there. We actually got our first approvals from the SEC on Bitcoin ETFs to trade on the stock market. Now, if you're a crypto person, this is big news because now investors, I trade mostly ETFs and stocks, and I trade with WeBull, and so I'm able to trade these things now directly on my WeBull. If you're somebody in the US, by the way, and you'd like to check out WeBull, it's the one that I use and recommend. It's linked down below in the description, and you'll get 12, I think it's up to 12 free shares when you sign up using that link down below. So check that out if you're interested. But Bitcoin, the ETFs are hitting the floor. I'm pulling up BTCO. This is Invesco's Galaxy Bitcoin ETF, and it will basically allow you to gain exposure to the cryptocurrency without going through something like Coinbase. And so here's Bitcoin in reaction to this. We saw a huge spike initially to the upside, actually hit 48,000, which was Frank's target here at A1. He was saying for some time now that he thinks Bitcoin headed to 48,000 with this momentum, and he was totally spot on with that. He's been saying that since October. So he's been so correct about that. But Frank, good call on the Bitcoin ETF launch being a catalyst. The question now is this going to be something that Bitcoin believers like or dislike? The fact that Bitcoin is getting turned into an ETF, or there is ETF variations of Bitcoin, is very regulated. And isn't the whole point about cryptocurrency to be unregulated, sort of controlled by a single entity? I don't know. What do you guys think about that? Let me know down below in the comment section. And one bonus chart for you. If you made it to the very end of the video, I'm going to ask you to comment the word coin. Comment the word coin. This is Coinbase, of course, one of the, if not the biggest crypto exchange. I think it's like the second. There's another bigger one, Binance or something. Anyways, coin. Comment the word coin down below. This is the stock ticker for Coinbase. And I actually think that this could be something stressful for Coinbase. If you think about it, if everyone can gain exposure, because a lot of times, let me back up. A lot of people use Coinbase as a proxy for Bitcoin. Basically, if they think Bitcoin's going to run up, they might buy the Coinbase picks and shovels business that offers people the ability to buy and sell cryptocurrencies, right? That's the idea behind Coinbase. But now that the ETF allows people to bypass needing Coinbase as an exchange, and a lot of traders can just collect exposure to Bitcoin through an ETF, does this take away something from Coinbase's offering? I don't know. I'm curious what you guys think about on that exchange, but let me know. Coin down below in the comment section. Write that word. I'll try and heart your comment, and it's a thank you for making it to the end of this video. I appreciate your support, and I hope you have a great rest of your trading day. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.